Hey, so thanks for joining the video today. I'm with Joel Pritchett. He's from Tommy. He's a co-owner there, and they're a buyer's agent down in Melbourne. They primarily work with trades across Australia in like mining, trade business ownership, and just general trades. So yeah, thanks for jumping on, Joel. Do you
Thanks for
mind
having me,
intro
Josh.
do you mind introducing yourself and sort of talking about how you went from school to then being a tradie and then into the property market?
Yeah, of course. Thanks for having me, Jack. So, outside of school, I guess first year I went straight into a bit of labouring. So first year out was doing roof tile removing. So it was a hard labour job, but it was good to build up a work ethic straight out of school. Then from there, got offered a plumbing apprenticeship down in Melbourne in the unions, which was too good to refuse. So I spent 5 years in the trade, and from my third year, I started investing into property from there. So I was 22 at the time. Before then, in the years prior to it, I've been spending a lot of hours week to week over the last couple of years just researching and learning as much as possible about property investing. And then from there, bought the first property at 22, and in the next 3 years from there just built a 5 property portfolio. Then noticed that I really enjoyed property investing and I guess helping others. So I started helping other guys on site, friends and family. And then from there, with my business partner Brody, we brought in the investment side at Tommy 2 years ago.
Nice, awesome. And so there's an investment side, as in like you were helping people like first homeowners get into the market, and then you started helping people actually build a portfolio too.
No, so Tommy was an existing business
Oh,
that
okay, yeah,
worked with owner occupiers. So they help
yeah,
people in Melbourne find homes to live in, like
hmm,
their dream homes in the inner
yeah, yeah,
southeast. And we started the investment side and strictly work with investors, typically tradies.
yeah, nice, awesome. And what sort of like influenced you at the early stages to sort of start looking into it? Like, was there a person of influence, or did you pick it up from somewhere?
I think for me, I'd always been super interested in investing and business from a very young age. At
Mhm.
I think 10 years old, I was out at the market selling pot plants with dad. And then from 15, 16, started dabbling into stocks and crypto using my sister's name to be able to get in and put my money in. So was always interested. And then I guess no particular influence. I think we're very lucky in our day and age that you have access to information. So if you are wanting to learn through YouTube and podcasts, I would just be every day on site having a property podcast in my ear. And
Mhm.
that was probably the main inspiration that wanted me to help me get started.
Yeah, nice. What were those podcasts? Was that like the
Oh, the
property?
main ones, the Pizza and Property podcast was a big
Yeah,
one. Listening to that every day. That was probably the main one because you had a diverse range of people that you could listen to and different
yeah,
investing styles. And then from there, started doing paid courses as well on my end to learn data research and analysis as well.
yeah, nice, awesome.
Mhm.
And obviously you primarily work with trades. So, what do you think like are the characteristics that people need to sort of have in them, or like what are the sort of setups they need to sort of be thinking about doing it? Like, what are the cues that they're ready to jump into the market and get started?
Yeah, I think it's more around creating a plan and just committing to getting that first property. Once in property investing, the hardest part is getting that first property, so saving up that deposit. So I think you don't need to be in a position to be able to purchase straight away, but you need to be in a mindset position to have that goal set and then be able to work back from there. So the first step would be to speak with the mortgage broker, whether or not you have the deposit to purchase a property. They'll be able to sit down with you, figure out your borrowing capacity, and then also let you know where you need to be at deposit wise. And that's just going to give you a rough timeline and idea as to where the goal needs to be.
Yeah, 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 for sure. I think mortgage
Mhm.
brokers in place start because it gives you that goal to work towards that. You probably don't have a number, and some people think that they're super far away, and then they realize like they're not actually that far if they broke it down.
Yeah, definitely. I was in that same position when I purchased my first property. I probably took a year longer than I needed to just because I
Yeah.
never spoke to a mortgage broker. So once I had that conversation, I was kind of, yeah, super confused as to why I didn't have that chat earlier. But that's why I always recommend to people to speak to a mortgage broker as soon as possible.
Yeah, for sure. I actually had the same experience, but I went to a
Hmm.
bank, and the
Yeah.
lady there was like a loan specialist or whatever, and she
Hmm.
said I couldn't borrow, and then yeah, pretty much went to a broker and I could borrow. So I think yeah, it also makes a difference who you go and speak to. Like there's a different caliber of brokers, like there's good ones and bad ones, that you want to sort of yeah talk to before.
Yeah, definitely. It's super important if you do have ambitions to build a larger portfolio that your broker has built a property portfolio of their own because they're going to understand the hurdles that you're going to come into further down the line and they'll be able to prep you for that and also help you strategize moving forward rather than getting stuck at property one or property two.
Yeah, yeah, yeah. No, that's good. I think yeah, that's great advice for sure. So what are like the common mistakes that you find that people make when they
Mhm.
are doing or looking at the property market to invest in?
Mm. I think the biggest mistakes I'm seeing at the moment, because we've had so much growth all around Australia, is people that are getting into markets like your Perths, your Queenslands, and Adelaides that have doubled in price in 3 to 5 years. In property investing, to maximize your growth over the long term, you want to be able to get into markets that have underperformed in recent years. So I'm
Mhm.
seeing a lot of people that I guess are getting caught up in the media headlines and they're getting into the Perths and the Queenslands now. But what this means is you've got a very short runway of capital growth. It can't keep growing at the rate that it has forever. And while
Mhm.
you might do really well in the first year or two, over the next 5 or 10 years, I think there's a lot better markets to be buying in.
Yeah, nice, nice.
Mhm.
And so how do you reduce the risk of actually buying the property and buying something that is going to make you money in the short, medium to long term? Obviously, you can't make money quickly in a short pace of time unless you're creating value of some sort. But yeah, how do you reduce the risks there?
There's a few layers to reducing the risk. First off, it's going to be at a high level in your location research. In property investing, picking the right locations is probably 80 to 90% of your investment. So as I just mentioned before, avoiding those areas that have had rapid growth in the last 3 to 5 years, that's going to take a lot of risk out of the purchase as well. And then also in the location is making sure that you're not buying in an area that is heavily reliant on one industry of employment, because it means if that industry does fall off, typically property prices will follow. So find an area that hasn't had the rapid growth in recent years, and then also avoid the areas that are heavily reliant on one industry. So that's the high level research. And then it's very important to do your due diligence on a property to property basis. There's flood zones, bushfire zones, heritage zones, biodiversity zones, easements. So all of these things need to be taken into account because you need to think about property in this lens of, okay, who's going to be a future buyer? If you've got a lot of issues with the property, whether it be backing onto a main road, a bus stop out the front, it's going to reduce your pool of future buyers. So you combine the due diligence on a property level, also with the high level research, is how you're going to mitigate all risk with investing in property.
Yeah, nice. And like, are you guys investing solely in existing properties, or are you doing things like pre-registered land titles or off the plan sort of developments as well?
Yeah, so that would be another really good point. We only buy established properties. I
Yep.
personally don't believe in house and land packages for a few different reasons. Not to say that you can't make money in them, but the big thing to watch out for is developers and so-called buyers agents that do sell these house and land packages are often getting big clips from the developers in the lens of 40, 50 grand. I get these emails every week from them offering me to sell them to clients. And the thing is that 40 or 50 grand is being added onto your purchase price. So a lot of the time, if a market doesn't grow from the point of when you start building the property to when it settles, you could have a valuation that doesn't come in at what you're paying. And it means that you'll have to chip in extra than what you were expecting to pay. And then on top of that as well, there is not enough research that you can do or data on new suburbs because you don't know how they're going to play it in the next 5 or 10 years. I really enjoy investing in established suburbs because you have that data there to analyze from an economic standpoint and also all of the due diligence and local agents that have been in the area for 10, 20 years. They understand the area and which spots to avoid and which spots to buy in.
Yeah. I think one big issue as well that I've seen people make the mistake of in the past is that there's just no supply, potentially restraints as well. So
Correct.
there's just so many properties coming up that they can just release new blocks, and then your property sort of doesn't ever create demand because it's just um,
Exactly right.
yeah.
100%. Because if, while there might not be a lot of building approvals in the now, in the short term, if there is that vacant land in neighbouring suburbs in the future, there's going to be a point where your growth will be hindered from the land releases and the builds of new properties for sure.
Mhm. Yeah, yeah, for sure. They're good points, mate. So yeah, what are like obviously if you wanted to work this out, you could just look at the risks and sort of come up with positive things to look for. But yeah, what are some of the positive things to look for? What do you look for when you're buying an investment property to get the biggest return on investment for your client?
Yeah, cool. Personally, what I really like, all clients that we work with are different, but properties in my lens, maximizing land content, brick houses on concrete slabs, they're going to stand the test of time. And if you have the added levers to pull of potentially a future renovation or also building a granny flat, it's going to allow you to keep building your portfolio into the future. So when you go to a mortgage broker and you get your borrowing capacity, there is going to be a limit. So typically, once you get to that limit, unless you're able to increase your income, you've got to have other levers to pull. So the other levers typically that you can pull if you buy the right property is going to be building a granny flat or doing renovations. So having a property that gives you those options, I think is super important if you are looking to build a larger portfolio.
Nice, nice. And then, so what are the key success metrics that you're looking at to make sure or to see if things went well? Or like what are generally like things that your clients look at to see, how did this go? Are we ready to do it again? Um, yeah.
Yeah, so the key things we always look at, so every 6 to 12 months after purchase with clients, we'll sit back down and do an investment inspection. So this
Yeah.
is where we'll do a review of their current portfolio, check the cash flow on the purchase, how they're sitting from a cash flow perspective as well. And then from there, once we get the valuations on the property, that's where we can start to strategize that next purchase. So they'll either be in a position where the valuations are really good on their current portfolio and they've got equity to pull out,
Yeah.
or they might be in a position where they either need to save some more or wait for the growth in the asset to increase a little bit more. So that's usually where we weigh up whether or not we're in that position to keep moving forward or whether or not we've got to wait a little bit longer and tick off certain things.
Nice. And so, I think from, experience, or talking to other people, buyers agents charge quite a lot, but you can
Mhm.
see sort of the reason why if you've done it and had success with it because it makes sense. What conversations do you have with people who are like on the fence? They know they want to invest in property, but they're on the fence about paying for a buyer's agent to help versus them doing all the due diligence themselves.
Yeah, it's a great question, and a lot of people do ask this particular question. The main aspects which I think a buyer's agent is super valuable on is first off the location research. As I mentioned before, buying in the right locations at the right time is 80 to 90% of the purchase. Obviously,
Hmm.
you do have the due diligence involved, but if you look at how much growth, say Melbourne has had in the last 5 years compared to Queensland, you've got 70 to 80% worth of growth difference. Now, if you're looking at a $600,000 property, there's a $400,000 difference there. So first off, I'd mention the location research. Secondly, I would say the time it takes to purchase a property. At Tommy, our average buying time is between 30 and 50 days. But I see a lot of people that do come to us that have been looking for 6 months or a year. And a lot of the markets that we've bought in have grown 10 to 20% in the
Mm.
first year after purchase. So if you wait 6 to 12 months to take action, you're missing out on a lot of growth. And it's not just the missed growth, but you're also now paying more for property at the same time. So
Yeah.
that's a massive cost, which people don't see.
Mhm.
But when you break it down, there's a really good survey, the Finder survey, which looks into the average buying time for people that are looking to invest in property. And the average buying time from the point of being ready to actually purchasing is 9 months. So
Right.
9 months is a long time, and that's going to cost you a lot more than a buyer's agent fee. And then also just the due diligence. I think there's a lot of people that don't pay for the data platforms that we do and don't have the time to do the research and find off market properties. So just having those, I guess, agent relations where you have access to more properties, and then also being able to, I guess, do another layer of due diligence that the average person wouldn't know how to do it.
Yeah, 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 nice. That's good. Do you guys help people who are like, say, for instance, um, they are looking to buy a house for their family and renovate it themselves, as well? Are these sort of things that you get involved with, or is it more just like either helping people get their family home or doing the actual buyer's agency for them for their investment properties?
Yeah, so for the investment side, we just help with people buying more set and forget type properties. We do help some clients that do buy properties that they then might live in and then renovate. But with
Yeah,
us, we want to make sure that we're buying in locations that we can, you know, be confident in that we're going to see growth. So it's more around us buying in particular markets at certain times. If someone does come to us and say they want to buy in an area where we don't believe that it's going to grow well in the next 5 or 10 years, we typically will decide to not take that on. So yeah, it's more around based off buying in the best areas possible for people that are just looking to build portfolios.
nice. And so like obviously I don't want to put you on the spot here, but like what are
No,
some of
go
the
for it.
typical outcomes that you get? What are some of the best case scenarios that you see? And then what are some of the worst case scenarios that you see? Because like I've owned properties before that
Hmm.
I don't think necessarily have been the best investments, but at the
Yeah,
end of the day, nothing bad happened. It's just nothing, like nothing. It's not been crazy good outcomes,
yeah,
but it's not been like a bad outcome. It's just not been super great. So yeah,
yeah.
like I guess there's levels to it.
Mhm.
So if you could just do like typical, maybe then best and then worst outcomes.
Yeah. So I guess starting off with some of the best outcomes, the clients that I like working with are the people that thought they would never be able to invest in property just out of fear and I guess lack of knowledge. So being able to help those people get started in property, there's a lot of FIFO guys that we have helped. So that's super rewarding. And I think the biggest thing is just investing. Like if you can go from never looking to invest to then just being able to get some assets behind you, that's a massive tick. And then the next part would be helping clients get 2 to 3 properties from zero. That's probably the favorite clients that I like working with is the ones that have that really strong income. They're looking to move forward. We're able to buy them the first property, which then leads into 2 and 3 in a short amount of time. Then I guess the typical clients we work with are either people that might already own their own home and they're using the investment strategy to then pay off their home in the future. So they might have, a $400,000 loan on their house. They're using some of the equity to then buy 1 or 2 properties with the goal of then selling them, paying off their home, and then start investing in property again. So
Mhm.
that's probably more around the typical people that we do work with. And then I guess the negatives of property investing is there can be unexpected maintenance things that do come up. I've had this happen many times. So I just actually had to remove trees on one of my properties that started falling down. So that cost me $10,000.
Oh, right.
So that's why I think it's super important to do your due diligence well. Obviously, unexpected things can come up, but then also having that buffer on the back end because you could have a hot water system breakdown, you could have trees that you have to remove, things that do come up. But if you do your due diligence right, for the most part, these things should be mitigated.
Nice. Um, that's great. Well, thanks for all that info. Well, so if there are resources that you're going to send people to, that they could learn more about it or learn more about you guys, where would you sort of point them?
Yeah, I'd say first off, you can either reach out to us on Instagram, so at the Property Tradies. Feel
Yep.
free to chuck us a follow and message me. We've also got a link tree in our bio with a document and a Loom video of me breaking down how to achieve 100K passive income in property. I'll shortly be doing one as well, breaking down how to go from 0 to 3 properties. So if you're looking for some free resources and wanting to learn, that's a good place to start. If you're wanting to have a chat with me, there's also a link in our bio there where you can book in a call, or alternatively, you can head to our website, Tommy, Melbourne Buyers Agents, and yeah, have a look through there, and then also book in a call through there.
Great. Well, thanks, mate. Thanks for joining me and have a good week.
Lovely. Thanks for having me, Jack. Appreciate it.
Good, mate. Welcome. Bye.
Bye.